how low is Bitcoin likely to go? Now, I'm using the word likely because we want to just look at the probabilities based on the technical information. Again, keeping in mind that the fundamentals are baked in to fear and greed, the buying and selling behavior. So you know what the news is saying, you know the rigmarole with the centralized exchanges and bankruptcies, etc. But all of that is baked into the buying and selling behavior. So we can get a nice overview, and we're going to look at a monthly chart, we're going to dive into a weekly chart, and a few other bits and pieces. But before we do, I want to announce in the next few days or few weeks, we are going to be launching our dashboard. We've been working incredibly hard on double time frame momentum. You know, it's a big thing that I use, but we've been creating tools not only for myself to use for the Done For You service, but then to also make it accessible to yourself. So here is an example of the dashboard. I just want to give you a quick run through. It's really, really cool. First of all, you're going to be able to input the assets that you want and decide the time frames. So in other words, if you're interested in Bitcoin, you can put on Bitcoin. If you're interested in ADA, as in Cardano, you can flick it on. We can flick this, choose any asset that you like. And what it does and how I've designed it is to make it as intuitive as possible. Now we're going to have all training on this as well. We're going to make it really accessible. But you'll see here, it's got the asset, it's got the bigger trend, and then the lower trend. And when they're pointing in the same direction, a bear downward trend and a bear downward trend, the instruction reads, consider selling. So today's content is actually, in terms of YouTube, is actually on Litecoin. And one of the reasons is we have a bear trend and the market is oversold on the lower time frame. And then the instruction that we've coded in is consider selling or shorting on the lower time frame. So be on high alert for this. This is pretty much ready. We're just working on the final bits and pieces in the training, and we're going to be launching it. It's very, very exciting. And it also comes with an extra piece, which I'm going to show you later on. So now let's just dive into Bitcoin. And I bring this up to your attention because we're going to use this. So what I've got in front of me here is a monthly chart of Bitcoin. If I just squeeze it in this way. And what I've done, I don't normally look that much onto a monthly chart because you don't make money from a monthly chart. It's really weekly, daily, and hourly. But it does give us a macro indication of what is happening in terms of the price action. And what I've put on here, I'll just bring it up like this first. Let me just bring it up like this. So you can see it in the bottom right-hand corner. Hopefully you can see it. It's the same trend dashboard that I just showed you, but just for Bitcoin. And I've chosen the higher time frame as the monthly, and then the lower time frame as the weekly. Now, though we wouldn't trade on this, it gives us a feel for what is happening in the market. And what it tells us is it's strongly oversold. What that means is the downside is limited. Hopefully you can see that. And the current weekly momentum is bearish. In other words, in a downward trend. So we want to be on high alert that we might be, over the next few months, coming towards a major low in Bitcoin, which is also reflective of the entire crypto market. So now just let's bring up the pattern information as well. So you've seen me do this time and time again when it comes to Bitcoin. You know, the 2017 bull run, that was just looks like a nice wave one, a very complex, long drawn out wave two. A thing that I did recently, I think it was on a market cap video, but it's really relevant for Bitcoin. Often the news on wave twos is worse than the beginning of wave one. And this is what I mean. So with this movement over here, we had the market move up and then we had the market move down. And this big bar to the downside was COVID. And this is a more intermediate wave count, a wave one and a wave two. And why I bring that to your attention is when there's something as extreme as COVID and the market reacts and there's a massive sell-off, often that's a good indication of a wave two is ending. And I bring that to our attention because it looks like we've got something similar happening right now. So we've got this macro trend of a 1, 2. We've had this, what looks like to be a 3, an unusually sharp 4, didn't overlap into this range over here, and then a 5. So it's pretty textbook when we're looking at it. And then we've had this really deep correction when it comes to Bitcoin. So we're going to look at this, and there's a few pattern positions that I want to bring to your attention, and also what the market would need to do in terms of price action to give us confidence that the low is in play, right? And we don't know that information yet, but it's more what are we looking for that gives us confidence that the low is in play. So right now, we're looking for shorting opportunities because there's a lot of bearish conditions. Even though the monthly is looking like a low, we don't make money off monthlies. That's like a long-term buy and hold strategy. So now what I'm going to do is I'm just going to get rid of these, and I want to drop down to now a weekly chart, right? We'll go to a weekly chart over here, and I'm going to get rid of this indicator now. We don't need that no more. So when we're looking at a weekly chart, it's the same information, right? The 1, 2, 3, 4, 5 ABC correction. And I want to pay attention to this ABC correction in particular, this here. Is it going to end up being an ABC correction? Well, it looks likely, but again, only time will tell. We have to make decisions before it ultimately unfolds. So we have to look at what's highly probable right now. The other thing I want to do is just a Fibonacci retracement. A typical correction, you probably know this by now if you've done the training, the typical maximum is 78.6%. So I just want to draw this on to see where is the price at in comparison. Now, it doesn't mean it's going to be bang on, but when we zoom in over here on a weekly chart, we can see we've got what looks like to be a relatively nice pattern in that 78.6%. So we've got two factors now from a technical position telling us the monthly momentum is oversold. We're at a Fibonacci price zone, which is the typical maximum correction. Now, we know crypto, especially in deep bear markets, go beyond 78.6, sometimes 85%. So we just want to be on high alert. So what I'm really looking at over here, we said this months ago, was if I just take the data back to this bar over here, I just want to show you a couple of things. At the time of this over here, when the market was doing exactly this, it looked like this was going to be the end of a correction. You know, it was at the 78.6. It looks like a pretty clean ABC structure. We've got the weekly momentum doing a bullish reversal over here. So it all looks good. And we can long this market. But why I'm bringing this to your attention is ultimately we don't know, right? We say the market should do a movement as a minimum to the upside. And depending on how the price action is, it will give us a valuable insight into, is it going to be a continuation or are we going to see a lower low? So what happened? Well, we know what happened, but let me just unfold the data because this is what we're going to be looking at again. If we can unload this data, if I can go a bit faster, this is a weekly bar. Now at this point, it hasn't been a bullish takeoff, right? It hasn't been a bullish takeoff. It looks almost weak. It looks weak. And as the momentum is still moving to the upside, what does this look like to you? Well, all of a sudden it's like, it doesn't look like, this movement over here in the far left. It doesn't look like that. And it doesn't look like that. It doesn't look like that. It looks a bit more like this, corrective. So when this occurs and there's not a strong follow through to the upside with a momentum reversal, that just gives us a big clue that we're probably going to see a movement to the downside. And that's what we said a few months ago if you saw the content. So we will take that into account. Let's just wait for the bearish reversal. Let me just unfold a few more bars. And now we can see that the market, I'm going to drop down to a daily time frame now because I'm going to do some price projections on what's likely to occur. On a daily, it was even clearer. Well, let's just zoom in like this. And we're looking at the price action. Let me just draw it out slightly more so you can see it a bit clearer. The main thing to take into consideration when you're looking at technicals, because I love fundamentals, by the way. People think I don't love fundamentals. I do, but it's just harder to kind of stay up to date with all the news, all the different announcements. And what I learned over a decade ago is that the fundamentals are ultimately baked into the price action. The way people are buying and selling, the big boys in particular, and big girls, the big players, it's factored in. And what I'm looking for is, does this look impulsive or does it look corrective? And when I saw this months ago, when was this? This was back in June. What we can see is that this low over here, it overlapped into this high over here. That's a sign of a correction. So I go, that's probably, even though this looked like it could potentially be the low, Bitcoin bottoming out and then taking off to a new trend, because of this pattern position over here, and this all looking very corrective, overlapping waves, is like, okay, and you would have seen this in the content, right? We said this is probably going to make one more new low to the downside and going below this point over here. So we're going to talk about that because what we've had in the last few days and few weeks, if we just unfold a few more bars, is this low was exceeded, right? Let me just unfold it so we can see it clearly. Just unfold it a bit faster. It was that bit faster over here. Keep going, keep going. Market moving sideways and bang, right there. At this point, the price is the best indicator. So if I just zoom out like this so we can see it clearly, a bit clearer light. So the price, if I just draw this, we got this correction. And when you get a corrective move like this, more often than not, you'll get a continuation of the prior trend. What that means in English is that the low is highly probable to get exceeded. So we had this big movement to the downside, unusual move here. This was like the ETH merge, the beacon chain, the successful 2.0. And then we had this move. We don't need to force a wave count, but the fact that the price closed below this low over here gives us valuable insight. So then what is the most typical buying and selling behavior when this occurs? Well, there's a couple of factors that I'm going to look at. The main one, if I just lengthen the chart like so, I'm going to do this over here. Are you familiar with the external retracement? Well, it's one of the easiest retracement tools that you can use, and we're going to reevaluate the count because this has been exceeded now. It's likely that the wave C is going to be somewhere down here. So let's just get rid of this line just to keep the chart clean for a second. Because what we're looking to do is not get caught up too heavily in the news, because it's just going to be FUD, fear, uncertainty, and doubt. Fear of missing out. It's going to be depression. Obviously, this is going to impact the markets, but this is quite typical for all markets at an extreme wave 2. There tends to be some type of really negative circumstances globally and sector specific. And in crypto, it's been a really tough few weeks in terms of news announcements, centralized exchanges, FTX, and so on and so forth. So when we know that, and what I'm trying to get across here is that the fundamentals are baked into the buying behavior and the selling behavior. Some people say to me, well, Jigir, how can you have known that the news was going to happen? I go, I didn't know the FTX scenario was going to happen, but often at extreme correction points, there'll be some type of news that will stimulate the movement. And that's very common, whether it's the China FUD that was happening in, I think it was April last year, and then there was other things in the November top, and then now we've had the FTX situation. So it's all baked in. So don't be overly surprised that you see this news bake in with technicals over here. So now what I want to finish on is very specific, mechanical, mathematical, non-thinking, objective information. What we're going to do, again, we're going to just look at what's most typical, what's most common, what's most highly probable, is we're going to take this low over here and this high. Why? Because this is the correction, right? It's the correction. And we're going to do something called an external retracement. If you're not familiar with that, it's in the training in the the Fibonacci price section. And we're going to use a retracement tool. Again, I'm going to take the low. I'm going to do it from over here. Just make sure I get this low correct. Low to this high. And the ratios that I want, you're probably familiar with these now, is actually the 1.272. That's the typical minimum. And the typical maximum is 1.618. Now, it doesn't mean it has to hit that level and it won't go beyond, but it's the most common price zone that we can anticipate that once we get a correction like we have with Bitcoin since June and the low gets exceeded, this is the typical price zone. So when we're looking at it now, we can see that we've already tagged the 1.272. But if I bring up the momentum again, the momentum indicator, we can see, in fact, I just need to make sure I unfold all the bars. This is where we are right now. What you should be able to see now is, if I just even get rid of this, we don't need that for a second. In the bottom left-hand corner, I'm just going to get rid of this as well. The weekly momentum, this is going to be great for your dashboard. And I've put training together to how to use this dashboard. It tells us that the weekly momentum is bearish. So it's a bear downtrend. The current daily time frame is also bearish. And we should only consider short selling, as in selling, right? Looking on the downside. And then we want to take the pattern position into account. Now, because of the external retracement, hopefully it's making sense because I'm talking technical terms. So if you've done the basic training, this will make some sense to you. If not, I cover it in the training itself. This is the typical minimum zone. but it's likely we're going to see the price go into this zone over here. Very, very likely indeed. And then what I want to get across as the main message is we always want to go with the trend, right? And even when the trend goes bullish over here, if the trend goes bullish over here and it's showing bullish signs, we can look to long the market. But then if it looks bearish over here, we look to short the market. So right now we're just looking for further shorting opportunities, and Bitcoin tends to be quite representative of the entire market. So now before I open up the floor to questions, I just want to quickly show you the YouTube content that I did today using Litecoin. Now Litecoin, I just want to show you this just so you can see it clearly. If I bring up this dashboard again, emphasizing the trend is your friend with Litecoin over here. Again, the weekly chart is in a downtrend, so it's a bearish reversal, so it's down. The daily time frame, which is the lower degree time frame that we're looking at here, is overbought. And what I've written as a note coded in, it says that the upside should be limited and therefore consider selling on a lower time frame. In other words, go to a lower time frame like an hourly chart and see if there's any pattern position that we can take advantage of. And what we see with Litecoin, and again, YouTube content is on this today, and I just want to emphasize this because it's the same whether it's Bitcoin, Litecoin, or if it's another market even outside of the crypto space, is that we've had this move to the downside. It looks like an A, B, C correction. We've now got the bearish reversals and it's basing it on this. So we're probably going to see a continuation to the downside. So when you see this information, then you want to have your entry exit strategy in play and then take the trade itself. One last thing, I told you there's a second signal to the dashboard, and it's these arrows. What we've baked in, I'm going to do it like this. Let me show you like this because I think it's very exciting. We've been working so hard on this, and now we're ready to launch it over the coming, hopefully, days. I was filming the training for this the other day. When this blue line, let me draw it like this so you can see it clearly. When this blue line over here goes below the red, what we'll get is a bear signal like this. And because the weekly momentum is already bearish, we'll see a red triangle appear like so, and it will be something like this. It will say the word sell. And what this tells me is that the higher time frame is bearish, the immediate time frame is bearish, and it says consider selling. In the dashboard, it will say consider selling, what to do, consider selling, and then the signal says right here is the signal. And then you want to apply your pattern position, ABC, Fibonacci ratios, and then your entry strategy, whether it's a 1-bar low, whether it's a swing low, or whatever suits you the best. So there you have it, guys. How low is Bitcoin going to go? Well, no one knows for sure, but let me give you the price ratios so we have a definitive answer. The typical minimum, which I think is going to go below, is around 15,700, which we're pretty much there already. And then the typical maximum is $13,000 Bitcoin. Now, you would have seen in my training that there's not always a clear wave count, right? There's not always a clear wave count, and we don't want to force a wave count. However, what I can see here is we've clearly had this as the top of this correction here. We've had a steep movement, but this correction over here is not that clear. You know, we could try to force a count, but you know, it might just be that this is a wave 1 and this is a wave 2, a small wave 3, and that we're going to get a smaller wave 5. That is a possible wave count. As the market unfolds, and if we do get this movement to the downside, we can really kind of dissect this in a bit more detail. But if this is the wave count that unfolds, the thing we want to take into account is, can you remember the rule for wave 3? Wave 3 cannot be what? Out of waves 1, 3, and 5. Well, wave 3 cannot be the shortest, right? If it's an actual wave 3. Why? Because of the psychology of buying and selling. It cannot be the shortest. Well, this one here looks bigger than this already. So that tells us if this is a wave 3, then wave 5 cannot be longer than this wave. And that gives us a big clue. And so this helps us in terms of how low is Bitcoin likely to go. Well, if I just kind of quickly measure how low is this, let's just see if this one is bigger. We can see that the first move is bigger than the second move. So what we can do is, let's just get rid of these drawings, is we can actually do a 100% alternate price projection on this movement here. Take it from this high and know that the move of Bitcoin should be less than this point. This is important. This is I don't cover this too much in the training because sometimes it gets a bit confusing. But if it ends up being as a wave 1, a wave 2, unusual wave 2, a wave 3, which is shorter than the wave 1, an unusually short wave 4, and then wave 5 should be less than 100% of wave 3. Why? Because wave 3 cannot be the shortest. So again, that gives us a bit more confidence that this is likely to be the typical maximum. But as the market unfolds, and if we do get a new low, we'll need to look at the intricacies. But that's forecasting. When it comes to trading and making money from the markets, we don't need to get too detailed. Right now, we can just go, what we're looking for is that the probability is on the downside. So when we zoom in over here, we can drop down to an hourly chart and we can look at this. Or if we get a clear movement to the downside, any pullback will be further shorting opportunities. So there you have it. How low will Bitcoin go, or likely to go? Well, the price is from approximately 15,700 to around the $13,000 mark is most typical and most common. So there you have it.